So in this session we are seeing one cash flow example. Okay, that is how to prepare a cash flow statement. Okay, now let's read it. The following are the changes in the account balances taken from balance sheet of PQ Limited as at the beginning of the year and the end of the year. Okay, so what is being given is they have taken the difference in the balances in each and every account which at the end of the year minus what was the balance at the beginning of the year. So what has been given is the difference. Okay, so balance at the end of the year minus balance at beginning of the year. This is what has been given. Okay, now particular changes in rupees in debit is given normally, and whatever is the credit balance change is credit, that has been given in the bracket. Okay, so let's see it one by one. Equity share capital 30,000 shares of rupees 10 each issued and fully paid up. There is no change. Okay, that means no new shares are being issued, or no, there is no redemption of equity shares. Okay, next is capital reserve. There is a credit balance. Okay, so credit change of changes in the account balance 49,200. So there is a increase in the credit balance by 49,200. 8% debentures, there is a increase in the credit balance by 50,000. Okay, and interest on debentures to be paid for 6 months. Okay, then debenture discount 1,000. So there is some debenture discount which has been given. Okay, and the amount is 1,000. Okay, so there is a increase in the debit balance of debenture discount by 1,000. Freehold property at a cost or revaluation. Okay, so 43,000 is the increase in the debit balance of your freehold property. Freehold property is nothing but your a normal land and building. Okay, so that freehold property, since it's a fixed asset, there is an increase in their fixed asset. The debit balance is increased by 43,000. Then plant and machinery at the cost 60,000. So increase in your plant and machinery at 60,000 at cost. Okay, then depreciation on plant and machinery 14,400. So this is a accumulated depreciation balance. Okay, so accumulated depreciation or provision for depreciation will have your credit balance. So when you compare your balance at the end minus balance at the beginning, there is an increase in the credit balance by 14,400. Debtors, again debtors, there is an increase in the debit balance by 50,000. Stock and work in progress 38,500. Then creditors 11,800 credit balance. Net profit for the year is 76,500. Again it's a credit balance, right? Net profit will be shown under reserves and surplus, so it will have a credit balance. So there is an increase in the credit balance of reserves and surplus by 76,500. That is nothing but net profit for the year. Correct. Then dividend paid in respect of earlier years is 30,000. Okay, then provision for doubtful debts is 3,300 credit balance. Okay, so provision for doubtful debts, what we do, we usually reduce it from your debtors in the balance sheet, right? So that is the increase in the credit balance is 3,300. So that is, there is an additional provision for doubtful debts which has been done during the year to the extent of 3,300. Trade investments at the cost 47,000. So there is an increase in the trade investments of 47,000. Okay, no interest or dividend from the investments during the year. And the bank is showing a credit balance of 64,300. Okay, that means there is a overdraft balance. Okay, overdraft bank balance here, since it's it's showing a credit balance of 64,300. Okay, then there are some adjustments which are given below. You are informed that capital reserve as at the end of the year represents realized profit on the sale of one freehold property together with surplus arising on revaluation of balance of a freehold property. Okay, so what does it mean is that capital reserve Okay, there is some capital reserves of 49,200. Okay, so what is that? There was a sale of one freehold property. Okay, so profit on that sale is included in this. So it includes profit on sale plus your revaluation. Okay, so there was a revaluation of one freehold property and one of the freehold property was sold. So profit on sale and revaluation both are included in this capital reserves. Okay, so this is one adjustment which we need to see. Then during the year, plant costing rupees 18,000 against which depreciation provision of 13,500 was sold for 77,000. So plant and machinery, there was a sale of plant and machinery. Okay, then the depreciation on that plant and machinery was 7,000. Okay, and no, depreciation was 13,500 and it was sold for rupees 7,000. So there is one adjustment for a plant and machinery here. Then during the middle of the year, 50,000 debentures were issued for the cash at discount of 1,000. So this debentures, it has increased because during the middle of the year, some 50,000 debentures were issued for cash at the discount of rupees 1,000. So here there is a adjustment. Okay, there is some information which has been given that 50,000 8% debentures are being issued for cash in the middle of the year. That is why the interest on debentures are paid only for 6 months, since the debentures are issued in the middle of the year, and 1,000 was the discount which was given on the debentures. The net profit for the year was crediting the profit on sale of plant and charging debenture interest. Okay, so net profit which has been calculated, it includes your profit on sale of plant plus it also includes a debenture interest. Okay, now we need to prepare a cash flow statement. Okay, so before preparing a cash flow statement, we will prepare all the workings one by one. Okay, so let's prepare all the workings. Now if you see, these are not the balances as at the end of the year. What has been given is changes in the rupees in debit or credit. Okay, so what we'll do is we will prepare some memorandum accounts. Okay, what is a memorandum accounts? Accounts out of the books of the company. It is just for our working purpose. So what we will do in that memorandum account is opening balance will take it as 0 and closing balance will take it whatever are the changes in rupees in debit or credit which is given here. Okay, so that the net impact is the same, that opening balance was 0, final balance is this changes in rupees in debit or credit. That means this is what has been increased or decreased in that particular account during the year. Okay, this is how we'll prepare a memorandum account, and then we'll prepare some working notes. After that we'll prepare our cash flow statement. Okay, so let's prepare some memorandum accounts first. Okay, so I have prepared the memorandum account. Okay, so memorandum accounts, plant and machinery account is where provision for depreciation account, freehold property and capital reserve account. Okay, now let's read all the adjustments one by one. Capital reserve as at the end of the year represents realized profit on the sale of one freehold property together with the surplus arising on the revaluation of the balance of freehold property. Okay, now let's see a capital reserve. Capital reserve account has a balance 49,200, increase in the credit balance of 49,200. Since we are preparing a memorandum account, what we are assuming is opening balance is 0. Okay, since the capital reserve is having a credit by balance brought down. Okay, we'll put it as 0. Okay, for our calculation. Then to balance carried down. So what is a balance which has been given here is 49,200. Okay, now this 49,200 includes your revaluation profit, okay, plus your profit on sale of freehold property. Okay, now the next adjustment will read. During the year, a plant costing rupees 18,000 again with depreciation provision of 13,500 was sold for 7,000. Okay, now first we will put the opening and closing balance of in your plant and machinery account. Plant and machinery, again there is increase in 60,000 debit balance at plant and machinery account. So for preparing a memorandum account, what we'll do is to balance brought down, we'll put it as 0 for our calculation purpose, by balance carried down 60,000. Okay, then provision for depreciation on plant and machinery, again there is an increase in credit balance of 14,400. So again here in memorandum account we will put by balance brought down 0 and to balance carried down 14,400. Okay, now we'll see this adjustment. During the year, a plant costing 18,000. Okay, so cost of plant was 18,000, against which depreciation provision was 13,500, was lying and was sold for 7,000. So let's calculate profit or loss on the sale of plant. Okay, profit or loss on sale of plant. Okay, so cost of plant and machinery is, how much is this? 18,000. Okay, and depreciation is 13,500. So 18,000 is the cost less accumulated depreciation 13,500. Okay, so what is a WDV? WDV is 4,500. Right, now what is the cost at which it is sold less sales price? How much is the sales price? 7,000. Okay, so how much is that? That is 7,000. So sales price less proceeds from sale is 7,000. Okay, so 7,000 minus WDV. So what is the profit on sale? 2,500 is a profit on sale, since selling price is more than your WDV. Now we'll pass these entries in our memorandum account. Okay, so let's see, what cost is 18,000. Okay, so this is a cost. Fine. Then what is the sales proceed? Sales proceed is 7,000. So sales proceed entry will put it here. Okay, so in our plant and machinery account, the entry will be bank account debit to plant and machinery. So by bank account, sale proceed is 7,000. Okay, then what is the accumulated depreciation is 13,500. So we'll transfer this accumulated depreciation from provision for depreciation account to your asset account. Okay, so the entry will be provision for depreciation account debit to asset account. Okay, so to plant and machinery account, how much it is? 13,500. Add here by provision for depreciation account, how much it is? 13,500. Okay, now what is the next thing? Profit on sale of assets. So profit on sale of asset is transferred from your asset account to profit and loss account. So since it's a profit, it will be on the credit side of your profit and loss account. So the entry will be to plant and machinery account debit to profit and loss account. Okay, since it's a profit on sale, so 2500. Okay, so this was about your plant and machinery. Next, during the middle of the year, rupees 50,000 debentures were issued for cash at a discount of 1000. Okay, so working note number 6 will calculate interest on debentures. Okay, on debentures. So debentures were issued during middle of the year. So interest on debentures will be for 6 months. So let's see what is the amount of debenture. 8% debentures, 50,000. Okay, so interest on debentures will be 8% of 50,000 for 6 months. Okay, so that is 50,000 into 8 upon 100 into 6 by 12. So that is how much? 2,000 rupees. This is what is the interest on the debentures. Okay, now let's see what is a freehold property. Freehold property, okay, your freehold property balance at the end is increased by 43,000. Okay, so freehold property, again since this is a memorandum account, to balance wrote down dash by balance carried down 43,000. Okay, now this 43,000, okay, now what is the capital reserve balance? Capital reserve balance is 49,200. Okay, so what all is included in the capital reserve is, one is the revaluation. Okay, the capital reserve, working note number 7, capital reserve. Okay, so what is the balance in the capital reserve? 49,200. So what is included in this? One is the revaluation of freehold property, and the other one is profit on sale. Okay, right? Okay, now profit on sale or proceeds from the sale. Okay, that is what is given here, right? Now see, freehold property, the balance in the freehold property is 43,000. So after evaluation, your balance is 43,000. Okay, so balancing, that is 49,200 minus 43,000, that is how much? 6,200 is your proceeds from sale of freehold property. Sale of freehold property. And since there is no depreciation which is charged on freehold property, your entire proceeds, okay, whatever you have received, you have transferred it to your capital reserve account. So the entry will be your freehold property. One is proceeds from sale of freehold property here by bank account, how much? 6,200. Okay, so 49,200, right? So this is nothing but this is to capital reserve. This has been transferred to capital reserve. So buy freehold property 49,200. So basically this 6,200 here is balancing figure. Okay, 49,200, 49,200. Okay, so now the other accounts will close it. Okay, so plant and machinery and provision for depreciation account. So plant and machinery, what is the total here? Total here is 80,500. Here the total is 8,500 less 2,500. So 78,000 is a balancing figure. Okay, so there were some additions to plant and machinery. So to bank account, okay, purchases of plant and machinery is 78,000. Okay, similarly we'll close the depreciation. How much is that? 27,900, 27,900. So this is nothing but depreciation during the year, right? So to buy profit and loss account, 27,900 depreciation for the year. Again, this is a balancing figure, right? So this is how we have prepared the working notes and calculated all the amount. Now we will prepare our cash flow statement. Okay.